This video is about returns inwards. A returns inwards is if a customer sends back goods. I refer to the case study Durant, which is about a company that deals with photo equipment. We only focus on one article, which is photo frames. The case study is covered in the chapter 22 and 23 of my textbook Basics of Accounting. I'm Carsten Berkau, full accounting professor in Osnabrück. My basic scripts will help you to understand international bookkeeping. In our textbook Basics of Accounting, you will find the case studies about trading businesses twice. In the chapter 22, it's only sales and returns. And in the chapter 23, it's sales and returns with value-added tax. As the case studies are repeated, you are going to find the description of the opening value in the chapter 22. An opening balance sheet is given. We focus on the inventories to the extent of 59,000. In the text, we are going to find the description of the photo frames. There are 304 photo frames at 19 euros per unit. This gives us the opening value of 5,776. As we want to take into consideration value-added tax, I go back to the chapter 23 and check the business activities for Durant Proprietary Limited with regard to the photo frames. On the 15th of January 2007, Durant Proprietary Limited sells 34 photo frames at 36 euros, which is the gross selling price. We ignore on credit and we just make bookkeeping entries on cash. We make the bookkeeping entry as a debit entry in receivables. In our video it will be cash 1,224, credit entry value tax, credit entry sales. In our textbook you are going to find a further bookkeeping entry number 5 for the cash collection. Thereafter we consider that one of the customers will return one frame. As Durant Proprietary Limited will issue a voucher, we have to make a credit entry in the accounts payables. The total bookkeeping entry is disclosed below, so it is a debit entry in the returns inwards account, a debit entry in value-added tax, and a credit entry in the accounts payables account. Keep in mind, in returns inwards is like a negative revenue. That's the reason why we have to make a debit entry. The company Durant Proprietary Limited will start with an opening value. The opening value is 304 multiplied with the cost of acquisition to the extent of 19 euros per unit. The first bookkeeping entry is about the sale of 34 thereof. 34 multiplied with 36, which we divide by 120%. This value gives us 1,020. The debit entry is in the cash bank account. Note that within periodic inventory system, we don't have to make an adjustment in the inventories account. With the bookkeeping entry number 2, we consider the return of one of the frames. This is in returns inwards as the company will receive that item. I make a debit entry in the returns inwards account, a debit entry in value-added tax, and a credit entry in the accounts payables for a voucher. Now we want to prepare a trading account. The trading account will show us the opening values, the purchases, the returns inwards. On the credit side, we record the revenue and the closing stock. I record the opening value, 5,776. The company earned a revenue of 1,020. Next, we have to calculate the closing stock. We assume that the returned frame is thrown away. For that reason, we calculate the opening value, which is 304 less 34 frames, which is going to give us 374. 374 times 19 gives us 5,130. I record the closing stock in the trading account. The reference is inventories. I make the debit entry in the inventories account. Reference is a trading account. Next, I close off the returns inwards account to trading. The balancing figure of this account gives us the gross profit. What happens in case the frame is not casted away, but it is put on stock? In this case, we will have an increase in the inventories account, which would be 5,149. And the gross profit will be higher to the extent of 363. Next, we focus on the perpetual inventory movement system. With the perpetual system, we start with the same situation. We got inventories. Next, we record the sale. For the perpetual inventory system, we record the release from stock of the 34 frames. That gives us the bookkeeping entry number 2. The contra entry is the cost of sales account. Next, I record the return. The return is for a voucher, so for that reason, we are going to make the credit entry in the accounts payables account. If the company throws away the frame, we don't have to do anything further except of balancing of the accounts. However, we want to consider now that the frames are taken in and I make a bookkeeping entry to put them on stock. I debit the inventory account by the bookkeeping entry number 4, which is 19, and make a credit entry in the cost of sales account. Next, I balance off the account. I don't have to do anything further. However, I now want to calculate how much will be the gross profit. I apply a profit and loss account. I close off revenue, returns inwards, and cost of sales to the profit and loss account and calculate the gross profit. Gross profit is as before 363.
Now that you have seen the video, take the textbook and study the case.